Good. So welcome you all once again to the question solving stage of IAS 2. Basically, IAS 2, two items that you need to watch out for or look out for. But it runs through all the standards. One, the recognition. And then the measurements. You are done. So measurements, then recognition. So recognition, simple. Answer the question, how do you record assets? So how do you record inventory? But seems like I've answered the question already. How do you record inventory? So how do you recognize inventory in the books? How do you treat inventory in the books? That is the recognition. So upon going to the video, you should know. Upon going to the video, you should know how inventory should be recognized or recorded in the books. Second, how inventory must be measured. We are done. So in summary, under the recognition, inventory, in fact, its swing moves. At a point in time, inventory is an asset. At a certain point in time, inventory is what? An expense. So at what point in this movement? First, inventory is what? An asset. If it is what? Unsold. So in summary, unsold inventory are what? Asset. It must be recorded assets as what? Asset. If it's what? Unsold. Then it must be recorded as what? As an expense. If it is what? That's the sold inventory or the sold goods. So that's a simple treatment of inventory. So that's why you see inventory both in the financial position and what? The P&L. So you'll be wondering. Meanwhile, the financial position, which is also called balance sheet, it only recorded balance. It does not record consumption. Take note. Financial position records only balances. Your balances are as at the year end or as at a particular period. But the P&L record what? Consumption for a particular period. Good. So, and expenses are consumption. So that's the recognition. So if the examiner asks you, how do you record inventory? Inventory can be recorded as an asset that is unsold, also recorded as what? Expense if it's sold. All of this boxed on by what? Prudence, accrual concept or matching. Accrual concept or matching, which states that expenses must be what? Matched against its related revenue and vice versa. Matching concept states that if you want to record revenue, so if you want to report on your profit, if you want to determine the profit for a particular period, relax. Match all that period's revenue one side. Where match all the its related expenses. So the difference will give you the profit. If you take goods inventory, so it means that you have what? Disposed it of. So the sold one. When you store the inventory, then it means that the cost of the inventory must be treated as what? As an expense because it has been what? Disposed of. So if you treat that one as an expense, then it will be part of the cost of sales. So that's why you see open inventory is added to what? Cost of sales. Open inventory is added to cost of sales because of the accrual concept. Good. And then if there was any unsold inventory, closing inventory, because that one is still within the organization or still has not taken place, what do? Carry it forward. Because we are assuming that closing inventory, you will sell it in the next period. So when you sell it, when you go to the next period and then you dispose it off, then you match it there. So it will be open inventory in the next period, but closing inventory here. So it means that unsold inventory must be carried as a balance, carried forward as a balance on our balance sheet. So that next period, when we dispose it off, it becomes what? An expense. So that is the recognition. And inventory is because of accrual concept. That's why we call it inventory. If not because of accrual, using the cash basis, there's no inventory. Yes, cash based, there's no inventory. Good. So take note. Now let's see our question. Question time, understanding time. So let's go straight. IS1, we will not do it. We do it on its own under publication. So IS2, I'll go straight to the questions. So let's see. Example one. Example one. Example one. For example one, you tried okay. I think I'll start with example one. Calculate the value of the inventory held. Calculate the value of the inventory held. So when I give you the question, you have to determine whether it's a what, subsequent measurement or the initial measurement. Initially, inventory must be measured at what? At cost. Subsequently, the law of cost and what? Net reservable value. So with example one, tell me, say calculate the value of inventory held. I can see cost there. I can see selling price. So it means that that's what? Subsequent measurement. I can see modification cost to enable the sale. Unit held. So let's see how best we can do this and you'll be fine. Go to the board to solve this question. Let's go to the board. So how you will solve this question under exam condition. So in exams, how are you going to approach something like that? Even though your examiner will not bring such questions, but for a beginner. Okay. So first, what we have to do is we have to look out for the terms or the items. That's the measurements. Any calculation is on the measurements. So the calculation is on the measurements. Explain the treatment based on recognition. So when we ask you, account for the above, we're looking for the two. So first, there are three types of inventory here. So I write the value of what? The inventory, as the examiner said. Value of the inventory. That's the first thing that I'll do. Then the second goes to the question. There are three of the products, A, B, and then C. I know that to find the value of a product, or according to IAS2, I need two items. What are they? I need two items. First, I need my cost, and then my NRV, and then I'll select the lowest one. So here, according to the question, we have the cost, right? What's the cost? 29, and then 12. Good. Then the NRV, which we don't know for now. So I'm going to calculate what? The NRV. So you come here and say calculation of what? The NRV. Let me do that one here. NRV. So to calculate the NRV, we need what? Three items. We say NRV is equal to In fact, NRV, we have to see estimate 3 times. So it is what? Estimated selling price less estimated cost to complete and estimated cost to sell the item. So when we say the cost to complete are sometimes called modification cost. You have to modify the product, change the packaging, yeah, to suit the customer's preference. So that is it. So here the selling price will come. Let's go write A, and then B, and then C. And then the modification cost. In this question, all the modification costs. Good. So the selling price of that of product A is 30, 12, 22. So 30, 12, 12, 22. Then the modification cost is dash to 8. Dash to 8. Good. So therefore, the NRV will be something like this, and then you add them. Good. So here will still be 30. Here will still be 10 Ghana cedis, and you'll be what? 14 cedis. My show. Or 16 cedis. Okay, so that is it. Then what do we do? Now we know the NRV. Now we can let it go and then match the cost. Can now let it go and match the costs. So first, costs, so here will be 30, here will be 10, and then here will be 14. So the standard is saying I compare these two items and choose what? The lower. So the lower. So these two, which one is the lower? And then you add them. Good. So I write the value here and tell the examiner that I selected the lowest one, so I write lower into bracket. Why? Because there are two values here and you just selected one. On what basis? So on lower basis. Right. I'll write the lower in the bracket nicely for the examiner. Then I'll compare. So you'll be 20, right? 9 and what? 12. Please. Yeah, it's coincident that all the costs are lower. That does not mean that in the exam question 2, one section is lower, other section low. It varies. So take note. Now this is the value. When you do this, if you score half of the marks, the full set of the question says value the goods. What you've done is per unit. Don't forget your currency must be on top. The currency must be on top, only for them. So that is it. Now what you've done is per unit. Meanwhile, there was some unit held. So let's go and then value it and get a total. So for product A, they have 200 units available. B, they have 150. C, they have 300. So it means that the total value will be what? Now we know the right value. To be 29 and 12. So therefore, you multiply and get the total value. That is it. But what we did was what? Per unit. Likewise, we could have started in total upfront by multiplying everything here by 200 or the respective units. That would be too much work. So you can do the per unit. After you get one figure, then you come and then multiply. So that is how you probably do it. And then you'll be fine. So underline word is that you will be fine. That is the underlying word. Okay, so do the multiplication for me. So I will do it this way. I will do it this way. So right after the value, I write unit here. So like unit held. They held 200 here, 150 and what? 300. So therefore, the total value will be 200 by 20. That gives us 4,000, right? 150 by 9, 13,000, 1,350. This by this, that gives us 3,600, and then you add that. It's not ended though. Then you find overall total. So overall total will be what? Because in a balance sheet, you don't need to show all the goods that you are selling, not at all. What do? Do the working somewhere, add everything together, and only one single figure. In fact, it is one and single. Only a single figure will be represented, not single figures 2 or 3, no. Only one value will be presented there, which summarize all the inventory or add up all the inventory together. So this plus this plus this will be the figure that we are going to present on our balance sheet. So what will be the figure? 4,000 plus 1,350 plus 3,600. That's 7,600. Then 8,950, right? So that will give us about 8,950. 950. 8,950. That will be the overall. So 8,950. So on our balance sheet, we will show what? 8,950 as the inventory figure. Good. So that is the end of the first question. This is an illustration, this is an example. So it is fine. Now let's go and pick our next question. If you do have any question, kindly let me know. Good. Good. Let's look at the next question. Now the question 2, we've done it, so I'll probably move on. Question 3, we've done it. Question 4, we've done it. Question 5 is your trial work. So can you do question 5, 6, and 7? Question 5, 6, and then 7. Okay, I'll do question 6. I'll do question 6, you do question 5. So let me go to example 6. So example 6. So example 6. Calculate the gross profit for Emmett Quintal. Yeah, so SC Trading Limited. So that's inventory written off. Yeah, the central focus is not on the gross profit. The central focus is on what? How to value the goods, right? Yes, how to value the closing inventory. So I'll just circle how to value the closing inventory and then go and do the remaining parts. Gross profit is what? The sales less what? Cost of sales. That's not the central focus now. Now we are doing what? Inventory. How to value inventory. So I'll do the inventory section. So that the company's financial statements ended at 31st March each year. As of 1st April 2013, the company had goods in inventory valued at 8,800. That's the beginning inventory, right? Opening inventory is 8,800. During the year to 31st March 2014, he purchased goods costing 48,000. That's the purchases. Fashion goods costing 2,100 was still in inventory. Wow, so 2,000 what? 100. That's the cost of the closing inventory. Agreed. Were still held in inventory as of 31st March 2014. The company believes that this could only be sold at a sale price of what? 400. The goods still held in inventory as of 31st March. No, for that bit, it's not parts. From the goods up to 7,600 is not part of it. So if you have hard copy of the notes, just cancel it out for me and then you're fine. So let me highlight that part for you. So moving from here, sorry. Good. Sorry. Okay, so this section from the goods still held in inventory up to the 7,600 is not part of the game. So you can strike that one off from the question for me. So that is it. Now the only issue is who can tell me the value of the closing inventory? It must be measured at what? The lower of cost and their what? Net reservable value. So the cost of the closing inventory is 2,100. But the company believes that this could only be now estimate. Good. Sold at sale price of 400. So what's the value of the inventory? So who can tell me the value of the inventory? Who can tell me the value of the inventory? Okay. Madam Doreen want to tell us correct value for the closing inventory is 400. Why? Because lower of costs. The cost is 2,100, but the NRV is what? 400. So it means that when you are calculating your gross profits, that I'm expecting you to do, you start your sales so much. In fact, let me even do it right now so that the homeworks are getting plenty. So sales revenue, they have to give it to us in a question. So the sales revenue, that's the last figure. The last figure in the question. 81,400, right? Sales for the year, 81,400. So 81,400. So sales revenue, 81,400. Then you say cost of sales. Cost of sales. We believe strongly that the open inventory is an expense, so it must be added to cost of sales. The open inventory was 8,800. So open inventory 88. And then purchases, items bought during the year, you're able to what? 48. Just that out of this 48, there was 2,000 left over. The closing inventory was 2,000. Meanwhile, the NRV is what? 400. So it means that the closing inventory here, we have to use what? 400. Telling the examiner workings number probably one, this one. So 400. So you have to subtract 400. That is it. Then this will be our cost of sales. Then we finally move it here and get our gross profit. And that's the end of the game. Good. So you'll be fine. So we've cleared that question. Obviously, we started slowly. Very soon we will enter into uh, deeper waters. We go. Yes. Now let's go to the tutorial questions. The remaining illustrations are yours. So I've done illustration 6 or example 6. You are doing 5 and 7. Example 7, take your time and then work on it small. And then there was another question 2B after the example. Yeah, this question 2. You try that one too. Then the tutorial questions, you're welcome. If you are going straight to question 3, if I do one, you do one. 1-to-1 mapping. I did question 6, so you are going to do the next one. Good. So question 2 is a trial one. It's coming from, that's ICA November 1999. Yes, so it's 99 past question. Just that's how we're doing question 3. It's more recent. So I'm starting with question 3. So you are doing A, then I'll do the B. In fact, we are doing all. So just the A. Tell me how the inventory will be stated. There you know the rule, right? The lower of cost and then their net present value. So question 3A, kindly do it for me. Just 2 minutes because it's a sentence, so very short. And this one, there are only 2 figures in it, so we can make decisions quickly. So what's the value of the inventory or the item? 10,000, right? Don't forget the rule. Any answer is what? Valid until the final marking scheme is revealed. So I take that. One said 10,000. Good. I'll take the 10,000. Friends online. So let's see, friends online. Okay, 10,000. I like that. Yes. Yeah, 10,000. I like that. I like that. I like that. But don't forget the rule. Inventory must be measured at what? Lower of cost and their what? Net realizable value. So you compare and then you choose the what? The lowest one. You compare. Please, it does not mean that any two figures they give it to us, you're supposed to select the lowest one. No. So we should pick what? The lower of a cost and its net realizable value. So that does not suggest that any two figures that you see anywhere, just pick the lower. No, no, it doesn't work that way. It doesn't work that way. Any figure that you meet anywhere, make sure that one must be a cost, one must be an NRV before you choose the lowest one. I'll be ready. Good. I like the analysis. That's great. I like this. Please, I can't see the NRV. But somebody saw it too. But that's what you gave us 10,000. Okay, that's fine. In fact, board. Let's go to the board. So, that isn't the general rule. Lower of cost and their NRV. So they are saying this. Let me read the question. A material or materials costing $12,000 bought for processing and assembled for a profitable special order. That's great. Since buying these items, the cost price has what? Fallen to 10,000. So the question is, which one will be the NRV? Which one will be the cost? Once there are two figures, the one must be cost, one must be NRV. Then automatically select the lowest one. No. They have to tell you that this is NRV before we select it. Or they have to give us the selling price, cost to sell, and cost to complete. If these three items are not there, it's not NRV. But here they say costing 12,000. So here the cost is 12,000. So $12,000. So let me do it here. The cost is what? $12,000. What's the NRV? Not given. What about the 10,000 given? They are saying that since buying, the cost price has what? Fallen. So that's the replacement cost. It is what? This $10,000 is what? Replacement cost. Meaning, let's assume that you bought some goods for some let me use ICA manuals, for instance. The ICA manual, the new one, when it came, it was the question bank, for instance, was 25 cedis. So around 25 cedis for the question banks. Yeah. So that was the cost price of the question bank. Since buying, since they started. Now recently, today, if you go to the institute and want to buy the question bank, it's around 35 cedis up to what? 40 cedis. So it means that the cost price has been increased. That does not mean that this 35 is what? The NRV gold. So this 35 means if I want to get the same question bank, then it will cost me 35 to no longer cost me 25. So that means this 35 becomes what? A replacement cost. And the NRV is not the same as replacement cost. And the IAS 2 does not even mention replacement cost inside. So therefore, it's not given. So not given. You can put that here and select what? The 12,000. So this inventory must be measured at what? At 12,000. Now, before you can pick NRV, they have to inform that the NRV is this. Or they have to tell us the selling price, or cost to complete, or cost to sell. Then we have to find it by ourselves. If these four items are not there, NRV on its own, not there. Selling price is not there. Cost to complete is not there. Cost to sell is not there. These 4 items are not there. There's no NRV. So no NRV in this particular question. So that is it. Now, if they give you only one, choose that one. In this case, NRV wasn't given. So the only information made available was the cost. So that means the inventory must be what? Valued at the cost of 12,000. How we get it clear? Good. So gather, we are moving on, right? Now let's take the next question, and then that one you should try out. You try it for me, and then we will work together. So the B part, and then you take your time, and then you go through the B part. I'll give 6 minutes. So let's spend 6 minutes on the B part, and then you'll be fine. So when you're done, forward your answer to me. Yeah. Now let's see the question. Now this is the solution to the question. The issue is that you're looking for the value. Anytime the examiner asks you to find for the value of the closing inventory, all what you have to do is just look out for 2 values. You are done. Pick the cost, pick the NRV. Don't forget that this guy is actual. This guy is estimate, not the actual. If they should sell the goods today, how much are they going to drive from it? This is the cost they've incurred to date. That is it. Now let's go to the question, and then we are done. Wow. Now let's read the question together, and let's pick the technical issues. It's saying that equipment constructed for a customer for an agreed price of what? $18,000. So this one is this selling price or cost price? 18,000 agreed price. So that's the selling price, right? Or if you can identify it, I'll be fine. So that's the selling price, 18,000. So please do 2 demarcations. One section is for cost, one section is for NRV. Anytime they ask you how do you value the inventory, you need only one section like this if they are testing you on initial measurement. That's the inclusion of cost. So that one, you just assemble all of them there, then you are done. So when you see selling price and those stuff in the inventory question, then the most preferred method is to create 2 sections. One section for cost, one section for NRV. Then you list the details there, then you are done. So under the NRV, I have selling price of what? So estimated selling price of, let me put the dollars here, 18,000. Then I'll relax. Then I'll come back again. Then let me go and read the question again. So as I read, I'll include it. This has recently been completed at a cost of 16,800. As we said, completed, actual. They've incurred it. They have completed it. So that's what the cost. That's the cost. So the cost of the goods will be, so that's the completed cost. So the cost has been calculated already to be what? 16,800. No breakdown. They've already calculated what? The cost. No breakdown. Good. So 16,800. When you do this, in fact, some people are happy. Yes, they're happy because it's in line with their own. But let's see what the end will do. Let's see. Yes. Now the last one, or the next figure we are going to pick, is the troublesome guy. Now they are saying that it has now been discovered that in order to meet certain regulations, conversion with an extra cost of 4,200 will be required. So conversion costs. The customer has accepted partial responsibility and agreed to meet half the extra costs. So if the customer will meet half, the company to bear what? The remaining half. We are calculating for the company, but not the customer. So it means that we pick 4,200. But before this 4,200, they mentioned convention cost. Meanwhile, we know that the cost of inventory comprised of three items. What are they? Purchase cost, convention cost, and any what? Other cost. So these are the three composition of what? Of cost of inventory. But they've mentioned convention there. Now, the convention that we are talking about under the initial cost, it must be incurred to date. But if you look at this 4,200, they are saying that in order to meet regulations, it's like you are come to sell something in Ghana, and let's assume you are going to sell car in Ghana, and your car is 10 years old. Our regulatory body will not allow you to probably import your car into the country. Good. Or your dream car if it's 10 years old. So this tells you that before you can make that sale, then there must be extra cost incurred. Now here, extra. So it does not mean that they've incurred it. If they've already incurred this cost, then it will be part of the completion or the actual cost. So here I like most of your answers. Most of you place it there. That's good. Just that the only issue was that the customer will bear half. So the company too have to also bear what? The extra half. So it will be convention cost or cost to complete. So we call it or extra cost. In fact, I'll call it extra cost. And here working is 4,200 divided by 2 or times 50%. So divide by 2. That will give us 2,100. So therefore, what is the total NRV? And then what is the cost? The cost is still 16,800. NRV is what? 15,800. 900. Average. 15,900. So that is it. Good. So now you get it right. Good. So anytime they give you the question, try and break it into two versions. What is the cost section? What is what? The NRV section. And then you are what? Fine. How we get that? Good news. So take note. My only issue is that how you differentiate between the conversion cost and cost to complete. Realize that this question has only mentioned conversion, but we did not place it here as if it's conversion. What the item has been what? Completed. Completed. Good. So that is it. I think I explained more in the video. So kindly, still not getting it. Kindly go back and then slightly watch again to be fine. Now, so that is it. Now the question is this: how do you do the accounting treatment? How do you do the accounting treatment if the NRV is what? The lower, or NRV happen to be the lowest value? Now, is that the lower value, right? Good. Now it means that the inventory must be what? Written down to the NRV. Or the inventory must be what? Written down by the difference. So compare and give me the difference. So the difference is what? 900, right? It's 900, right? Good. So that is it. The inventory is 900. No, the written down value. So what we do? This will be the interpretation. This will be the interpretation. Yeah, it means that the inventory must be written down to so interpretation number 1. must be written down to 15,900 or written down by 900 Ghana cedis. That's the first interpretation. 2, the inventory must be measured at what? 15,000 or valued at the NRV or the 15,900. Why? Because what? The lower value. And then you are done. Now, what is the accounting treatment? The accounting treatment is that first, this 900 is an expense to us. It must be added to the cost of sales. It's a direct cost. So we add it to what? Cost of sales. The 900 must be added to what? The cost of sales. So that's the first treatment. If they should ask you, good. Second, so treatment number 1, add it to the cost of sales. So add to costs of sales. That's the write-off. 2, subtract it from the cost of the inventory. Subtract it from the cost of the inventory. And then show it in the P&L. Sorry, the financial position. So, in fact, when you subtract it, it will give you the NRV. So, in bracket, just submit the NRV in the financial position. You are done. Now, the cost is 16,800. When we take off 900 from it, it will still move us back to the 15,900. So, in short, after you expensing this in the P&L, the NRV must be taken to where? The financial position as the value of the inventory, because that's the lowest. You need to do this if and only if the NRV is what? The lower or the lowest, right? The lower, right? Good. Now the issue is this. If the cost of the assets happen to be the lower, now what you do is you do nothing. You do what? Nothing, because in fact the cost is the actual. They've recorded it. The truth of the matter is that most often this cost has been recorded because it is the actual. This is an estimate, so it's not in the books. So if what they have recorded is the right one, then you have to do what? Nothing. And then continue with it. But if what they've recorded per the law is not true, then you have to perform magic to move it, to take this one off and bring the right one in. That is it. So that is the first scenario. Now we are moving on. Slowly. We'll finish. Now the next one too, you are tackling it for me. The next one too, you will take time and then you work it out for today. Now the next one will be question number okay, so question 5. Question 5A. Start work. That's 2 minutes. Question 5A. So have you seen how it is? Yes, you do more to understand what more. It says an inventory count on 31st December 2015 listed goods with a cost of 10.5 million. This includes the damaged goods that had a cost of 800. This would require remedial work costing 450 before they could actually be sold for an estimated 950,000. Now the question is, prepare the relevant extracts and state how this could be accounted for in the books. So first, you calculate the write down. First, you calculate the value of the closing inventory. That is, you choose between the lower of the cost and then the NRV. Second, is there any written down or write-off? Inventory write-off or written down. Then second, what goes to the financial position and what goes to the P&L? We are done. Good. So now let's see how best we can do this. So the cost is 800, selling price is 950, cost to complete is 450. So what's the NRV? Now the issue is this. In summary, the, all the inventory had a cost of 10.5 million. But out of this, included in this, so not all the goods that they are valuing, only a portion. So only what? A portion. So and normally call it either slow moving or out of date or damaged goods. So we say lower of, then I like my this thing though. I write my cost here nicely, my NRV here. Examiner will understand. The cost has been given to be what? 800 Ghana cedis. 800,000. NRV, we need to get the estimated selling price. It was given. Estimated selling price to be 950,000 Ghana cedis. Then cost to complete, they say remedial work. So remedial work. So remedial work, the cost of it, or that's the cost to complete. So you can just call it cost to complete, which is 450,000. So therefore, what is the NRV? And then what is the cost? So the cost is still 800, but there's no issue. This year you cannot use 10.5. You cannot use your 10.5 because we are not valuing the entire 10.5 million. No, we are just valuing what? A portion included. So here will be 500. Here will be 500. So inventory must be measured at what? The lower of cost and its what? Net reservoir value. So the lower of cost and then its reservoir value. So that is it. So which one is the lower here? Which one? 500, right? But not 800. Good. So 500. Now, when having that way, anytime NRV happen to be the lower, then what we do is we have to account for the treatment, and that's where we require you to tell us what go to the P&L, what go to the financial position. But if the cost is lower, what do? You do nothing. So take notes. If the cost is lower, you do nothing. You don't need to do anything. Good. So first, P&L, what goes there? So the cost of sales, you find the difference between this and this, which is 300. So that means the inventory must be what? Written down by what? 300. Inventory must be written down by 300. So that's the first thing you do. So the treatments are one. Treatment number one. So the treatment. So the treatment will be, the treatment will be one. So accounting treatment. Add 300,000 to what? Cost of sales. Add to cost of sales. That is if the cost of sales has already been calculated. But if you are now calculating it, then what do? If you are now calculating it, then use the right closing inventory figure. That's the lowest one. Do not use what? The written down. Good. Now, two, in the financial position, this is the P&L. This is the P&L. What will go to the P&L? The 2 is the financial position. You record the value, the NRV. But here, if you record 500, it's incomplete because the inventory is made up of 2. Slow moving, which is 800. No, good. So out of this 800, we have valued and we had what? 500. So let me the other portion, right? Which will be around 250, right? Good. The other portion is around 250, eh? Yes. So that means that 250, that one is correct. So if not value that one, you can add it to 500, making what? 750. Good. If you don't want that one too, I can give you two simplest technique. When you go to the financial position, we say pick the cost of the inventory, right? So you pick the entire cost of the inventory. So subtract it. So the closing inventory will be in the financial position. The closing inventory will be into brackets the 10.5 million. I don't want to write it in full too. Let me write it. So the 10.5 million less what? 0.3 what? Million. So 0.3 million. So that is it. So 10.5 less 0.3 million will give us what? 10.2, right? 0.3 million. So that's the written down. Subtract the written down from the cost of the inventory and then you add down. So subtract the written down from the cost of the inventory. It must give us the same answer. That'll give us 10.2, right? So 10,200 and 10,200. So that's 10.2. So therefore, the closing inventory is 10,200. That is 10,200,000. Good. So something like this. So this is the closing inventory. This is the first alternative. Let's go and do the other one. Okay. I like the question. There's a question here that says, how will you know from the question that you are not allowed to value the total? How do you know? Okay, now let's go to the question. I think I'll answer that one. In the question, they said the inventory count on 31st March 2015 listed goods with a cost of 10.5. So the entire cost is what? 10.5. This includes some damaged goods. They say includes. They didn't say that these goods are what? Damaged. Have you seen? So it's a part of the goods. So that means you are only valuing part, not the entire goods. So that's the instance. And then second, you can also use the selling prices and the details given to you. The details given to you are for the slow moving, not for the entire goods. So that is it. Just that when you are done, whatever value that you arrived or whatever value that you had from the slow moving must be added to what? The normal one. Good. So that is it. Now let me do some small issue here. Alternative, how to get a 10,200. I'm going to use alternative. First, the entire inventory is 10.5 million, so that'll be 10 million, something like this. Good. Out of this, 800 is slow moving. So left with how much? So what's the normal one? Or the damage? Out of this, 800 is damaged. So when you take the damaged goods out, left it. We said 7, it wasn't, we said 2, it wasn't 2. So 10,500 less what? 800. That will give us any idea for me. Hello, any answer for me? this less this. So that will give us 9,700. Good. So that's 9.7 million. So that means the normal or the goods that are not damaged is 9,700. But the damaged one is what? 800. So therefore, now that we know that the correct values for that of the 800 is 500, we can now add it back. Add it because that is the lower. Then when we add it to give us the 10,200, so that means that will be the value to be placed in the books. So that is it. Or we can just less the write-off from this and then you are done. So this is how we are going to do to solve the question. I like your answers and then your inspiration and then you'll be fine. Now let's continue. This is May 2016. It's a part of a question. Publication, you are going to meet it in a publication. So in a publication, you are done. Good. Now let's continue with the next question. The next question. That one, you are doing it. I normally give that one as a work, but I think we'll do it here. That'll be the last question that we will do to end the inventory. The remaining ones are trial. So question 5B. Let's see. Start to work. That's ICA November 2017 past question. So try that one for me. And then you will be fine. Good. So it reads, so SNL Limited has the following products in inventory at the end of 2016. Units, cost per unit, Ahumka and Adonko. Wow. Ahumka and what? So unit held, they are there. Cost per unit, all of them are there. So each product normally sells at what? 34. That's what? Estimated selling price. That's the selling price. Estimate, normal, budget. Due to difficult trading conditions, S&M Limited intend to offer discount of 15% per unit. So the selling price must be reduced by the 15%. That's good. Or you can also treat it as what? It's a discount. You can also treat it as what? Selling cost. Any of them, the answer will be correct. Either you subtract it from the selling price directly. So if 15% is discount, then the net of discount should be what? 85%. So you take 85% of the what? The selling price. That will give you the actual selling price or the estimated selling price that we're supposed to use. Good. Or you can still take the discount on its own as what? Selling cost, because there's a section that says estimated cost to complete and cost to sell. Good. And expect to incur 4 Ghana cedis per unit in selling cost. 10 Ghana cedi per unit is expected to be incurred to complete each unit of what? Adonko. Adonko is what? Part completed. So that's the cost to what? To complete. Cost to complete. Now, if you understand this question very well, it should give you a reliable guide to solve the question 5. The question 5 that I gave as homework. This particular one, let me go there. The illustration question 5. Illustration 5. So this very one, if you understand what you are going to do carefully, you can what? Answer this question very well. Because this question is a bit technical. So please take your time and then do justice to it for me. Just take your time, relax, and do it. Question 5. So let me repeat the homework. Question 5, 7. 5 and 7 are yours. And then the tutorial questions to the one that we may not be able to finish them. All of them are yours. Now let's go back to our question. Good. So that is it. In accordance with IAS to inventory, at what amount should inventory be stated in the financial statement of S&M Limited as at 31st of December 2016? So now let's go to the board and then do justice to it. Now this is a past question, that's 2017. Aside this question, there was one again, I think it's November 2018. That one has not been captured here. I mean those ones also good. Bring those on. But I promise you with some questions on conceptual framework. And then I ask for a gentle reminder. I've not received any reminder. I just want to remind today. So, but the one that's supposed to remind me, I forgot about it. So I'll work on that and bring them on board. Good. Now here, you have to value them individually. You don't need to combine them. So we start. There are 2 products. So individually, that of so let's do Ahomka first. Then when you are done, we're going to do what? Adonko. So Ahomka, so value of inventory. So we start by saying value of inventory. Value of inventory. So value of inventory. Ahomka ginger details. So I'll be the cost here and I'll be doing here. Are we saying straight forward? Then you are done. So the cost has been given to us. So let me go and pick it up. That's the first. In fact, I'll do that before I go away myself with a difficult one. Even if I'm not able to do that, I'll be able to bring the cost, the market for you. Cost of Ahomka is what? 22 Ghana cedis. Okay, 22 cedis. So I write the cost here, 22 cedis. 22 cedis. Then selling price is 34 cedis. So the selling price is for 34. But you can less the selling cost from it. That's the discount and get a net of discount. So estimated selling price. So selling price, I would say that bracket 85% times what? 34. Why? Because there's a discount of 15%. I'll be good. So I'll find a net of discount. If you don't want trouble too, you can still maintain the selling price at 34. And when you are calculating the cost to sell, discount is one of them. So you say discount. open a bracket and say 15% of what? The 34 and bring it there. It's also what? Acceptable. So select the one that what you want and then you'll be fine. Select the one that you want. So now can give me the answer of this. 85% of 34. Something point something. Is it? So to be 28.9. So that's the net selling price. Net what? Selling price. Now let's see. Do you have cost to complete? That's how can. Do you have cost to complete? There's 4 Ghana cedi and 10 cedis. Will apply to can. Now let's see. They are saying that expect for Ghana cedis selling cost. 10 Ghana cedis per unit is expected to be incurred to complete each unit of what? Adonko, not Aunka. Yes, by the first week. So here there's no cost to what? Complete, but we only have selling cost. So there will be selling cost, which is what? 4 Ghana cedis, right? You put it in brackets. How we get it? So on that note, that will be the end of the game. So here's 22. So have you seen how smart the game will be? So nice like this, you are done. Yeah, alternative. This is your alternative. You can maintain the selling price like this, SP 34. How we get it? And say selling cost is 4 cedi. Discount is 15%. So find 15% of 34 for me. What will be the answer? 15% of 34. That will give us something dot one, either 5.1 or 4.1. One of them. 5.1. Good. So like this. Then you subtract. Sorry. So this will give us the NRV, net realizable value, of 24.9. Either you select this one or this one, any of them, you are what? Right. So select one for us and then you'll be fine. Good. Now let's see how we will continue the game. So now I'll take this section off. Now tell me, at what value should I state the outcome? So outcome must be valued at what? Outcome must be valued at 20, 22. Are you sure? Are you sure? Why are you choosing 22? Tell me the reason. That is it. Slower. I went back. So therefore, outcome must be valued at 22 cedis per unit, given a total of, so into bracket, what's the unit held? So how many units of, I like that, yes, I like that, I like your answers. In fact, friends online, you are doing well. And then, but everybody's doing well. So what's the unit held? The unit held is what? 5,400. So therefore, the total value will be 5,400 times 22 cedis. And that will give us Ghana cedi of what? 118,123. In fact, this figure is a guess figure. Please calculate it for me. I just guess it. I guess it. So just calculate for me if it's true. Please go ahead. 1. So it's 800. Okay, so leverage 800. Yes, so kindly let me put it here 800. Good. So that is what Ahumka. Then you relax and come back and come and do what Adonko. So let's go and do Adonko. Kindly take a snapshot or copy down because I'll claim the same place and then do what the Adonko there, and then you'll be fine. So have you seen how you solve the question? Irrespective of how long it is or like where they are moving you, just list what you are looking for. If they are there, you look for it. If they are not there, you end it and then you are done. Good. Okay. Any question? No question. So let's go to Adonko. So Adonko. So the figures are there, right? So let's go to Adonko. So for Adonko do the same thing. Oh, I've cleaned the selling prices. So not even clean the selling prices. So here I just have to now delete here and make it what? Adonko. So Adonko. Yes. So the cost, we said that the cost, it must include the cost to what? The cost that they've incurred to date. So that's the cost incurred to date. So the cost of Adonko is 26, even though it has not been completed, the cost is 26. So the cost of 26 it is. Still, the selling price will be the net. So 34 times 85% net of discount. Everything will be virtually the same. 10 cities, selling cost will be 4, and the cost to complete of 10 cities. The difference is that here there's cost to complete of what? 10 Ghana cities and selling cost of 4. We are done. So here will still be the 28.9. And then here there's cost to complete. Cost to complete. And that's what 10 cities. And then selling cost. Selling cost to be what? 4 Ghana cities. So here what is the NRV? So let me put the NRV here. Then the cost, total cost is 26. NRV is what? 14.9. So therefore, the inventory must be valued at what? Adonko must be valued at. So therefore, Adonko must be valued at what? 14 Ghana city of 14.9 per unit. And then you are done per unit. Then you are done. So therefore, given a total of into brackets, what's the unit held? 2,800 units, right? Times Ghana city of 14.9. And that'll give us 54,000. 54,000. Yeah? Oh, sorry. 41,720. So therefore, the overall total value of the inventory is Adonko's value plus what? Ahomken's value. So therefore, total value of the inventory will be into brackets, add the two together for me. 41,720 plus 118,800, and that'll give us Ghana city of 165, 520. Okay, so that is it. And all this was calling for 5 marks. all this was calling for what? 5 marks or 10 marks. So that is the end of that question. So that's great. That's great. Now I'll leave 3 technical questions for you. You will try that one and then I'll come and then complete them. They are not difficult. They are just like this one. So you take your time and then work through and then you are fine. So if you have any question, kindly ask. If not, then I'll give my trial work, the remaining part of it. And make sure that tomorrow you go through the IAS 8 video before Wednesday for that of the question solving phase so that we can move faster. Yes, good. So on that note, today we able to finish the IAS 2. What left is a trial question. Try them and then when we meet we can discuss them. Good. So I'm leaving 3 strong questions for you. We are done with question 5. Question 6 is yours. That's the one of them. Question 6 is yours. So for question 6, and then you are doing question 2. Yes, so 6 and 2 plus the illustrations. Please, I need a solution to them. Yes. Any chapter that we do, the questions are many. So don't let them become plenty before you take a full leave and do them. No. So note that. So take notes and then you'll be fine. So question